Good evening, ladies and gentlemen. In case you couldn't tell, today is very serious business. So, we can take a look at a bunch of specky trades and really have a focus on spec stocks. We're going to take a look at what's been traded intraday the last few days, as well as some speckies that I've taken for a swing trade and the thought process behind those trades. The first things first is XRG today, a 21 mil market cap company, and this is the announcement that they had. If you want to pause and read it, by all means, but ultimately it is just a 5.6 mil contract over 20 months to commence from today. Okay, look, that reads okay, right? This isn't something that typically launches. It's like, great, it's with the Department of Defense, which is, it's nice. It's a big name, it's a big company, obviously, but just these kinds of announcements, like I've seen stocks in this penny stock range around 20 mil market cap where they get $20 million contracts and they just don't really do anything. So this morning the call was, and this is such a classic trade for me, where things catalyst wise don't line up with what's happening in the order book, right? The order book looked fantastic. Now, this is pretty much the comment for the stock this morning at 10:07 in the morning, so a minute before open. You're probably wondering, wow, why are you doing a write-up 1 minute before open? Well, we discussed these on voice chat, and I thought I'd just quickly write out my expectations for this trade in case anyone else has an interest, but just generally it's just for reference. So the call was XRGs, not to expect too much, and that was earlier in the morning what the call was. And then as it came closer and closer to open, the book was looking better and better and better. The volumes were really healthy. I think it was like about 2 point something million? Yeah, 2.5 million, where on an average day, not an average day, but when it spikes, it tends to have, what have we got here? What's the biggest day it's had? 2.1 million. So on its biggest day is 2.1 million in the last year or two or so, as you can see here. So it was opening with bigger volumes than its biggest day for the last couple of years or so. So that in itself is a signal for me to take this trade, especially if the order book, matches. There's no crazy sell volumes on the offer or anything like that. But just generally speaking, high volumes is usually quite healthy and good for spec trading. That sounds really obvious, but apparently some people are pretty unaware of that. So while it's a nice big gap up from 37 to 56, that is a trade that I would take every day of the week, purely based on volume. And of course, a healthy looking order book. Now, was it spectacular? No, of course not. It's a specky, right? Speckies aren't going to look anywhere near as good as mid caps on a good day. But for a specky, it was fantastic. And of course, the call was 5 minutes, 5 to 8 minutes. That's my expectation for an opening rally, purely based on the volumes that it had. And of course, the fade from there because the news just wasn't that good. Now, is it good for the company? Yes. Is it good for day trading? No. That's my point. Is day trading wise, this was not a good announcement for just volatility and liquidity. Turns out liquidity in the opening few minutes, perfectly fine. Died out exactly 5 minutes after it opened, and that was it. That was the day done for XRG. There's no VWAP retracement. There's nothing there. There's no double bottoms. I mean, there ended up being one a little bit, sort of, but ultimately that was it. That opening drive kaput, right? And you're probably wondering, well, how do you know? Well, it's just a collection of experience about contracts relative to the market cap that it had. So when a stock was rallying this much pre-market and opening up really high with high volumes, the circumstances there was that okay, 5.6 mil, great. The company, US Department of Defense, great. Longevity, whatever, what was it, 20 months for 5 mil? What's that going to do? That's going to nothing. It's really nothing. Honestly, it's nothing. In my eyes, for a trade, it's nothing intraday. So moving on, we had AAJ, which was just an absolutely stellar announcement. A lot of people were distracted. I saw nobody mentioning AAJ pre-market, which is fantastic. This gap up was weak as fuck. 1.6 to 2.1. Okay, percentage-wise, that's pretty big. But in terms of gap ups, like compared to what we just saw, it's not as big, not as significant. The volumes weren't as big either. And this was the announcement for AAJ. Multiple high-grade copper and antimony. And of course, antimony. Like, come on guys. Antimony, it's the hot thing right now. So 11% copper, super high-grade copper. Anything above 2%, high grade. 11%, super high grade. And of course, keep in mind, these are rock chips, basically meaningless. In reality, these rock chips mean nothing. On speculative day trading, they are everything, just for the day. We also have antimony, whatever it came out as, I think that's low grade. If I recall correctly, 2% is where antimony starts to matter. But long story short is it wasn't that interesting from an antimony perspective. So we got AAJ, opening drive, beautiful. On the daily chart, if we go and have a look, absolutely nothing in terms of historical volumes. Mwah. Beautiful. Beautiful. So everything kind of lined up. The order book was perfectly fine. I remember it jumping straight to 2.5, like basically in the first minute of trade. I just couldn't see a planet where this opened up at 2.1 and then just failed for whatever reason. I know there are some people that were like scared to take this on a match because the gap's too big. Whatever that means, too big. It's quite relative to both the market cap and the order book and how much spread there was and how much protection there is in the book and stuff like that. That sort of probably relates more to sizing than anything, but in terms of risk to reward, this was just an absolute baller of a stock. It just ticked all the right boxes and there was nothing else to trade for the day. I think people are trading 360 or something like that. That was a good trade as well for the day, but I think a lot of eyes and attention were on 360 and not on AAJ. Now, those were two really, really nice intraday trades. I think one was Monday and the other one, XRG, was today. We're going to take a look at just a couple of swing attempts that I've made. I posted these up on Twitter along with the results. Now, for me, a swing could be anywhere from overnight to 4 weeks, but these all, I guess we'll go through one by one. So the idea behind this idea this play that I'm looking at is largely related to two aspects, and one is volume and the other one is the 200 moving average. Now, there are other elements behind the trade, but I'm not going to go into detail because I'm still working out and fleshing out the details. So the idea is a high volume break and the 200 moving average as a starting point. That's like the criteria to even begin this process of looking for a stock potentially to trade. This one, 2.6, closed out at 2.4. Look, volumes, cracked it on ICI, moved on. Lost it for 2 ticks, minus 7%, something like that. So I also probably shouldn't have taken it because I know ICI was moving on earnings here, popped through, and its earnings, I don't want to call it deceptive, but they were quite similar to an earnings they had before where the percentages looked absolutely monstrous and healthy, but in reality it just didn't turn out too well. I can't remember the exact details, but I sort of knew that I probably shouldn't have been on it. But mind you, I'm just dabbling in small size, trying to find what works. So I've done quite a bit of back testing on this, and it's actually quite powerful, the kind of moves that this setup that I'm looking at has. Now we're going to look at one that actually worked. So we had 4, here we go, SRG. The high volume break, sorry, it's not SRG, SGI. So we had a high volume break through the 200 moving average with volumes, bought it the next day because I didn't spot this one till the next day. So I bought it as I was shopping around. I think it was 26.5 was the entry for this one, and then just left it alone. Rallied, closed it out at 36. I was looking at a partial at 36, and then I kind of failed to go again the next day, and I was like, okay, well, we're just going to start closing at 36 or 36.5, whatever. It was probably a mixture of both, but it was over multiple parcels. So it was quite a nice trade, a nice big swing to the upside. You can check out the daily, how nice it looked, sort of nice momentum to it, and that ended up working out quite nicely for the criteria that we were looking at. Then we have ATP as well. ATP, again, same sort of idea. The first criteria is the 200 moving average popping above it. Second one is the volume spike above it. We caught this one at 13.5 and still holding it. I ended up selling out another stock and just adding onto this one again at 13.5. I think it was Monday this week and Friday last week or something like that. Basically, it's just 13.5, 13.5. We have dividend coming up, so ex-div is going to be tomorrow. About 1 cent, I think it is. And that's it. We'll see how it goes. A little bit of a volume spike as it pushes up. Not too exciting. It's going to be a bit slow and grindy. But the idea is once it gets to 12.5, well, that was the initial idea, is once it gets to 12.5, it's kind of bail. But we're going to have it, because it's going to be ex-div, it's going to gap down by the dividend amount. And that'll take us to 13. We'll just, I guess, pay attention to what it does and see if it sort of breaks down from there. So that'll be kind of interesting to see. And then we have NAG, N-A-G. N-A-G, similar idea. Ended up getting it on this day here, where it sort of came down, at 1.9. I believe it was 1.9. It sort of dropped to 1.8. I don't think I would have got filled if I queued up there, but that's okay. 1.9 was perfectly sufficient. The play here probably should have been to just close it out. I mean, there was a 40% rally in one day. And I think it was just greedy for me to expect it to just keep going to the upside. I mean, 40% is what I took on SGI after a week or so. So for me to hold on a 40% move after just an hour or whatever it ended up being, like a really short time frame. Yeah, in hindsight, probably should have closed it out. Ended up closing it out, I think 20, 23, 22, something like that. So look, it still ended up green. Percentage-wise, it's still not too bad, but really just in hindsight is perhaps just closing it out straight off the bat, and ended up coming back in at 1.7 and closing out at, fuck, what did I close out at? I don't know if I closed out at 1.7 or 1.6. I'm pretty sure I broke even on this trade. I queued up and hit out. Can't remember if it was on the same day or not, but the point is, yeah, it just fell through. Too much volumes. It kind of, you can see it just pushes through the 200 moving average. I was like, whatever. So we've got ATP going sideways, a couple of ticks to the upside with the next div. Not that I care about the dividend. SGI worked out really well. NAG worked out okay, I guess. It didn't end up being a swing. It did end up being a more of a day trade, but I ended up closing out the following day. But still working out on the idea behind this trade as well. So it's by no means just 2 bits of TA. There's a little bit more behind it, but I also ended up taking DGR. Now this one is something that I plan on just sitting on for a very long time, right? So I shouldn't need to say this. I shouldn't need to say it, but I'm going to say it anyway because I know you guys are sick of it. But I'm not a financial advisor. I don't recommend you to buy, sell, or do anything with any of these stocks, right? Plain and simple. So DGR, the idea behind this trade, or dare I say investment, it feels weird saying investment because I'm not an investor, but this looked like a value buy to me. So this stock has around $40 million worth of Sol G, which is a UK listed gold miner, gold specky, if you will. It says here around 27 billion market cap, but that's actually not the market capitalization of this stock. It's around 270 million. So I think this is trading in cents, not dollars, is my understanding of how this works, because it's on the UK listed exchange. That it's not in fact $9.04, it's like 9.04 cents. So that's why the market capitalization is a little bit funny on TradingView. So 270 million market cap, they got about $40 million worth. It probably might be 38, 39 million now. I don't know what it is, but it's still fairly high. And with DGR, the market capitalization was, what was it, 12 mil when I bought it? So a $12 million company has more than triple its value in just the holdings of SOLG. So I thought, fuck, the value there is a bit too good. And you might be wondering, well, what's the relationship between SOLG and DGR in the past? Now, DGR has always been undervalued relative to its holdings to SOLG. So if we add in, we'll see if this, I haven't actually done this yet, SOLG, so we'll see. So I guess it's only relative to the starting point. Yeah, that's not particularly helpful. The point is that it is more undervalued now than it has been historically, right? Let's say it's trading 30% undervalued at some point in time based on its holdings. Well, now it's trading at, well, it's 3 times under its holdings value. So it's a significant difference. I guess that doesn't quite show it either, but the point is that it's significantly undervalued in terms of what they're holding versus what they're priced at the moment. I'm not sure how takeovers would work in this situation, whether, a company comes in, tries to do a takeover of DGR, and then just sell the shares on SOLG, and then just pocket the difference. Like, does that not make sense at all? If you just do a takeover of this company for 13 mil market cap, sell 40 million, pocket 30 million profit. I mean, I'm probably oversimplifying it. I actually don't know, but this company does run through money every year. I forget how much it was, a couple of mil a year. So I really don't know. I don't recall, but the point is that they're not really doing too much. No one really likes management, and when no one likes management, people get a little bit salty about the stock, and then the price is depressing. So it is what it is. I just think the value here, the value proposition, is just too good for me to not be a part of it. So I did end up buying some DGR, and look, if it works, it works. If it doesn't, then fuck, whatever. Who cares? I'm not putting like significant sums of money on this thing, banking on it to work. So it'd be nice if I bag this thing in the next 3 or 4 months. Fantastic. If not, whatever. All right, guys. Peace.